And the rebound continues. We can finally start being positive again with gold and silver prices, especially obviously with silver. Silver didn't really have too many issues, but gold, on the other hand, was struggling a bit. But after it hit that support level of around 1770, last week by the end, it really started to rise back up. As you can see down here, looking at the candlesticks, by the end of the um, week here, we got a green candlestick, and obviously today we have a stronger green candlestick. Now, one of the reasons why we're getting this, obviously, is because of the DXY. Now, the DXY has been trending down today, which is good. It's down at 90.14, well, now at 90.15 here, but it's trending down today, which has been given a huge um, margin of support for metals prices and commodities as well. And even those who are miners of these commodities are doing really well. Now, you guys know that I have positions in this company right here, BHP, Billiton. They're based in Australia. And today they're up 1.13%, doing okay. Oh, I mean, 1.47% looks like. Doing okay. My target for them is really around $83 or so, and then I'm probably going to get out. Um, but there was another company that I was into before them, and they were called SCCO. Obviously, you can take a look here and see that they're doing extremely well today. They were struggling. I mean, they were down in the low 70s for a while, and now they're in the 82s, almost about to hit 83. They are up over 4% today. And one of the reasons why is because of this country right here doing really well, China. So, funny enough, BHP, the company that I have positions in, their CEO came out today and saying, hey, what's driving demand with copper and other minerals is because of a healthy recovery happening within China. This is from, again, this company based in Australia. This is what he had to say here after being asked. First, just talk to us about what's driving demand and what you are seeing from a global recovery standpoint. Mike Henry then says, well, look, thanks for having me on. In terms of the what's driving demand, first of all, healthy recovery underway in China. They were obviously, looks like he's kind of stammering here. Economic recovery came more quickly than many expected. And in more recent months, we're seeing an acceleration of the recovery elsewhere as well. And for a company like BHP, the health of the global economy is everything. And Adam Shapiro says, there's a lot to talk to you about. There's coal and issues with China, but I want to jump to the future and specifically nickel sulfate. And he also talks about lithium ion batteries, EV, other things, and especially nickel sulfate. Mike Henry then says, they absolutely are. So this is a very positive story. BHP is one of the world's largest producers of what's called Class 1 nickel, which is the nickel that lends itself well to battery production. Nickel sulfate is an intermediate product which is used for battery precursor, and we're in the process of building our first nickel sulfate plant in Western Australia right now. And then, as you can see here, he continues to say, or a question was asked, is that the read that you're getting when you're looking at the demand that you're seeing from specific countries? Just generally talking about strength coming out of China. Mike Henry says, no, not at all. So if anything, we're seeing an acceleration in the economic recovery and greater confidence growing around that recovery as well, of course, as with the getting deployed. Now, it's not to say that there's still not some uncertainty around this issue right here. We're keeping a close eye on that, but for now, things are looking pretty good and more positive by the month. So as you can see here, there's a positive outlook on the global economy, specifically with China as well. As you can see here, Goldman Sachs has said there's a historic copper shortage looming as prices rocket. And if you scroll all the way down here, they've actually taken a look at one of the reasons why. Here's a quote. Indeed, overnight copper extended its surge to a 9-year high as Goldman Sachs warned of a historic shortage with, quote, the market now on the cusp of the tightest phase in what we expect to be the largest deficit in a decade, as Chinese buying triggers the next leg higher, adding to expectations that prices will near a record sooner rather than later. Here are some highlights from a note published overnight by Goldman analyst Nicholas Snowden. It says this: China's return from the Lunar New Year holiday has heralded a burst of onshore investor copper buying after the holiday season, with limited inventory builds evident so far. This latter trend, during a period of what should be peak surplus generation onshore, has particularly bullish implications given that the market is now on the cusp of the tightest phase in what we expect to be the largest deficit in a decade. So, this all plays a role in what we see happening within China and what we will be seeing with China this decade. As you know, the United States, we're poised to have a GDP return in the negatives for 2020. For China, on the other hand, they actually have a positive return. And that may actually speak volumes to the GDP growth rate for this 2020 decade. Take a look here. Chinese economy to overtake US by 2028 due to this issue right here. But they were already on track to do so anyway. And for those of you who may be a little bit skeptical on that, take a look at the GDP so far for these countries. The United States has a GDP of 21.43 trillion. China's not too far behind. They have 14.34 trillion. So all it really takes is for China to continue its strong rate of growth with its GDP before it overtakes the United States. Now, that won't be too hard for them when competing with the United States, and one of the reasons why is because of this. Here's our debt to GDP ratio when it comes to the United States. Obviously, we're well over the 100s now. We're at 107.6. And, for 2020, we had 106.990 in 2019. It's just been a steady increase over the years. And if you take a look at China, for 2020, they had a 61.7% debt to GDP. Last year, it was at 52.63, before then 48.8. And if you just project it all the way out to 2025, it should be around 78.07%, still below 100%. So as we keep adding more debt onto the US economy, our rate of GDP growth will continue to slow while China's continues to do pretty well. Even though they will get slowed down by debt generation themselves, their growth rate will still outpace ours, which makes sense and gives this some credence as far as the Chinese economy overtaking the US sometime within this decade. So generally, guys, though, dollar devaluation is good for us gold and silver stackers, it's just kind of a little bit of time to have a little bit of a requiem for the US economy when you just think about it in terms of its stance in the world. But let me know what you guys think in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.